Hello guys, welcome back to my YouTube channel, and today I am actually coming to give an update on NZDCAD, that is NZDCAD. Okay, so on NZDCAD on the monthly time frame, the last time I explained talking about how I would like this market to give a little bit of retracement or even produce making high highs or probably come to this area before actually giving us maybe the next move to the downside and all that. Okay, so what I have today on NZD New Zealand dollar versus the Canadian dollar today is actually a trade recap, right? So on the monthly time frame, we can see the market was making higher highs, higher lows, higher lower lows, lower highs, lower lows, lower highs, lower lows, lower highs. And right now it broke structure from this area here. So, and when you look at the way price has behaved, when price came down, you can see price made a little bit of a larger W, in which price is tapping on that particular W right now. Okay, and when you look closely once again, price made an overextended W also here, which came back and tested upon that area and then took this wave to the upside, right? And when you look again, we have another W which is formed around this area. Okay, and now price is tapping at the wicks of this particular area. And now let's consider this area as a rally base rally, right? And now we are getting price to tap into the zone and move back to the upside. Considering this fact, so now we have price making an impulse, correction impulse, and now price has come back to the rally area where we expect price to tap then move back to the upside. But with this, we need a whole lot of confluence to form before we can be able to take the wave back to the upside, maybe tapping into these areas or probably taking out this particular highs and then confirming our buy momentum, because as you can see the market was in a very huge longs and then making this whole lot of correction, and then we can expect the market to start moving to the upside. So let's go to what pattern can we find on this particular market when it comes to the pattern strategy. So using the pattern strategy, you can see from here we have this nice bullish triangle, bullish pattern right here actually. So you can see how this has formed. Most of you might not take this. Most of you might take this particular wick here comparing to this particular one. It doesn't matter. It just needs you to confirm two touches at least. So you can either take this and this one, or can take this and that one. You can even take it and this one, but which means in this case you'll be comparing it as support and resistance in the horizontal way. Okay, so now when we also look at that area of support and resistance, we can see price actually made this low, and now price is tapping up around this area of this strong resistance, in which it means that price is likely pushing back the upside with this particular confluence. Okay, so our target for this particular trade is actually on this monthly zone. Okay, but if prices give us a break of this structure, I will be targeting these highs, and eventually the last high of this, which will prove that the market has given us a potential way to enter. Okay, so with this confluence as price giving us bullish market, let's switch quickly to the lower time frame. Let me clear my chart real quick. So let's go to the weekly time frame. So on the weekly time frame, price was doing the same thing as I said. It was giving us impulse corrections as well. You can see we had this impulse correction. Now price had this low and then made this new high. But price gathered momentum, broke this particular new high, making a new higher high, right? And now price found the opportunity to come and tap into this particular area. As a result, that this particular area was the reason of this structure break, right? That is why price found momentum to come tapping into this particular area and then giving this break and then shooting up to the upside, confirming that the smart money concept is in control of the market. So now the second thing you want to look at is that after price was going up, you can see price had a mixed candle in this particular bias and made a new high, right? Coming back to break this particular low, gave price the momentum that let us understand that there was a lot of liquidity lying down on this area that price has to close and then take the opportunity to put into this particular areas to push to the upside with much liquidity. And as price went higher, it was this particular um, last move candle that actually pushed to the upside, breaking this particular structure, right? So as price broke structure, you can see right from then, price found its way to create at least this particular liquidity lows that you can see with this particular candle and this candle right here, so that it can be able to come and mitigate upon this area to either give us a correction, impulse correction, and then make new lows, probably to these areas, and probably breaking to these lows and changing its direction, right? So that is what the market is on the weekly time frame. Let's switch to the daily time frame. So on the daily time frame, price, you can see price is moving very beautifully. And when you can see studying the price action, all you always need to look at is the present price action, right? I personally trade smart money concept, but in a different way and with a different concept that I use. I mix with a bunch of knowledge that I have gained or for a year trading with the style I love, and I have seen it very nice of me trading with it. And you can see from here. So let's get back to it. So you can see when the market started getting down, you can see price started slowing down and losing momentum, right? Meaning price was exhausting. It was squeezed. You can see how price was squeezing and giving us a whole lot of, and now we had this break to the upside. After this break, price broke the highs and then tapped into this particular demand areas and shot up to the upside, tapped again, gave us the next move, tapped again, and then gave us a particular wave, right? The reason why this market is doing so is because in the smart money concept, we have this rule that when the market makes a low, then makes a new high, then comes down, breaks the old low, then makes a new higher high. It comes back to tap into an order block around the area, goes up, comes back, probably tap into another demand area, goes up, taps into another demand area. As far as it is giving us a correction, then eventually comes back to the upside, right? So that is what has actually happened in this part. So when we check the trend line on this particular, you see that it will be connecting to each other as a result of that particular type of demand check-ins that we are giving. It is like a wave, moving like the water waves, right? So that is what. So as price did this, you can see. So when price was coming, price made a correction, an impulse, and then you can see a blue candle mix, which is a bullish candle. Then the next low, which broke this particular low, and then made this strong move to the upside, leaving this particular strong order block. Okay, so let's go to the 4-hour time frame and see it much clearer. So on the 4-hour time frame, what we do see is that this was the particular impulse that was on the higher time frame, right? So you can see after the break of the structure, price made a new low, a high, then a lower low, breaking this particular new low that was being formed previously. Then it went back up with momentum, breaking this high. But when you look at the high, you ask yourself, where will I select my order block? The order block is literally the last down move candle before the strong up move that broke structure. Okay, let me repeat again. The last down move candle that appeared before the last strong move back to the upside, breaking structure. It should have a break of structure as a clear sign of a strong order block. And in that sense, I will recommend this particular candle as my order block, right? So let's go to the 2-hour time frame. The 2-hour time frame is where I refine and take my entries. And in this case, that is where I have a nice entry. You can see how price has actually slowed down when it goes to this particular area, because the candle on this particular area is strong enough to hold this price, to push it a little back a bit higher, and then tap into these areas. Okay, because already we have this nice liquidity sweep that happened. I thought I could take this entry to this sell, but I got like I was stronger, or I was afraid of this moves, because I didn't want to get caught up till, because I was looking at this particular order block right here. Okay, as a trader, I need to have so many possibilities. So I had several losses on this particular area because of the liquidity that was being purged around this area. So now the liquidity is being taken. It left a little bit of liquidity that it needs to take as well. So I am expecting price to go back, tap into this particular liquidity, and then giving us the next down move, the next move to the downside. So at my order block being this particular candle, let's refine it. Okay, so my order block would have been the ash candle right here, which is the bearish candle, but it had no momentum to break this particular structure. So it was the next candle that had a momentum to break structure. So in that case, that is my last down move candle before the opening. So now one would use this as our order block. Let me just switch this particular triangle for a second. Let me give us a blue OB. So looking at this particular area, you can see price came and tapped in nicely. To find its ways to push to the upside, but momentum is not being given. Okay, so let's go to the lower time frame. So if you have a nice POI right here, actually my entry is being triggered and I am inside this trade and I don't really care, just waiting for it to see how it plays out. My stop loss being placed safely. My first target is this before the new high over there. Okay, so I have a nice risk of 3 to 7. Okay, but let's go to the lower time frame to refine this particular order block now that it has tapped into our point of interest on the 2 hour. So let's navigate to the 30-minute time frame, or some can literally say the 1 hour time frame. All is fine, but you can see on the 1 hour time frame the exhaustion is not clearly seen. So let's navigate to the 30-minute time frame. So on the 30-minute time frame, you can see how price has created this nice preliminary supply which is right here. Selling climax, automatic rally, uptrust, our test here, and I can call this our spring because this was a liquidity that was being around this area. And now we are now looking for our last point of supply to actually break the structure, come back tapping in, and then taking us back to the upside if that happens. If that doesn't happen, then I'll be in a loss, okay, because the market will just continue moving down, giving us a correction, then moving down, and then eventually I will hit my stop loss. Okay, so that is what I have for this particular. So let's go to the lower time frame and see how we can refine this particular area. So for us to refine this particular area, we need to see a clear break of structure. And in this point, we don't have anything that has shown that we have broken structure because price is still mitigating on each area. As you can see, price doesn't break structure. It just quickly taps into an order block and then it rejects and taps into a demand area, it rejects, and now you can see it is tapping into another demand area and it's forcing to break the structure. Okay, so let's hope it breaks and we just wait for it to tap and mitigate on this particular order block right there, back into our order block that will be found around this area, and then we move back price to the upside. So that is my weekly outlook on this particular pair, and hope you guys take advantage of it, and see you guys in my next video.